Hello Market Club members everywhere. Welcome back from Labor Day weekend. It's Tuesday. It is the 8th of September and the market should be getting more serious now. People are coming back from vacations and I think we'll see more liquidity and perhaps a little more volatility. But let's take a look at the big picture. We've talked about this before. This is a chart, close-only chart, weekly chart of the Dow Jones. It goes all the way back to 2007. I'm going to draw a simple trend line. We talked about this before, we showed you this before and why we thought this break was important. So you can see right now, just based on this trend line alone, and it's a classic trend line because you have the parts that you need to have at least 3 touching parts on a trend line to make it valid. There's 1, 2, and 3. And there's the break right there. So how far could this go? Potentially, if we put our Fibonacci on there, we could see this market go considerably lower than where we are right now. This is the Dow. Okay, so let's take a look at the other indices, which aren't quite as severe as this one, but this is definitely a clear break. This is an important trend line, a very important trend line. And if you look at our trade triangles, you can see they're all negative. So even with today's sharp bounce, it hasn't changed the picture at all. This is the S&P 500. Again, we're going to draw the trend line in, and we're going to go from the very lows that were seen in the first quarter of 2009 all the way up. That's a valid trend line. Look at the points, 1, 2, 3, 4, 5. I would say around the 1800 level, which is quite a bit lower than where we are right now, is where the market should begin to find support in the S&P 500. On the NASDAQ, we'll draw the same trend line from the lows right here, and you can see that comes in around 4,000. Still a considerable drop. Still, it's a considerable drop from where we are right now. So I don't see this market just turning around, going right back up. I just don't see that's in the cards right now with all the problems out there, the political problems, the China problem, and also what the Federal Reserve is or isn't going to do. So that's how we see the indices. Still, they're all negative, all the trend lines, and also on the trade triangles, plus you're below the 50 line on the weekly, which is a serious thing. On the euro, you can see it's just a little bit choppy, sort of fighting around that 50 line, really hasn't got anything over that yet. And if we look at the closer in on this market, we'll go on to a daily chart, and we'll go to 6 months, 3 months, and you can see it's beginning to flatten out, and we're almost getting over the 50 line, but not quite. But all of our trade triangles, by the way, are positive on this. So you want to be long the euro against the dollar right now. This is crude oil. Remember crude oil, we had the pullback. We said there's the 50 line. This is where support is. It's still at that very same point. I think it looks very, very good. I think we'll see this market improve, which is pretty contrary to what everyone else is saying. Right now, we're in a trading range. And I would say probably if we see this market move over the 47.30 level, which is a little bit higher than we are right now, I think we'll get this market begin to accelerate on the upside. But nonetheless, it looks as though it's just made that turn. We had the move up, as you can see. We talked about that before last week. Move up. We sort of had the pullback, and we were right on the support level on the 50 line on the RSI, which is a very good indicator of support and resistance levels. Last market is the gold spot market, and you can see there it's just sort of meandering down. Still a mixed bag. You should be out of the market. It's a mixed 65. It's a trading range. We're below the 50 line. Nothing to get so excited about in this market. I would say we'd have to move over 1,130 to really get this thing going on the upside. So let's see what happens, but nonetheless, just be patient. That's the key. Be disciplined and don't get sucked into these markets because it looks like a quick buck. It'll cost you money. I'm Adam Houston for Market Club. Thanks for stopping by. Thanks for watching the video, and remember, stay disciplined.